Hi, welcome to the Market Alert for Thursday, the 25th of May 2023. So news today, debt ceiling doubts skyrocket, everything sold. June first T-bill yields top 7%, according to the news there. US declined amid debt ceiling fears after hot UK CPI. I didn't think it was that hot. It came out at 8.6, I suppose 8.2. It was higher than that forecast figure. Futures were boosted after hours on Nvidia earnings. Oh yeah, great. Graphics cards for computers boosting the market. Stocks fall on default yields as rise on hot UK CPI, hawkish wallet. And also we had the FOMC meeting minutes last night as well. And then Fitch places United States AAA rating on watch negative, blames political bipartisanship. So, are they going to default? Probably, but it's no big deal. It'll just be a technical default. They happened in 2011 under Obama. The only thing that's different to this one is obviously, well, there's a few things actually. The debt's higher than it was back in 2011, of course, and also interest rates. So the interest payments on this are going to be juicy. I think it's a couple of trillion. So you wouldn't want to be paying 7% on that, would you? So there's going to be a lot of government cuts or tax increases to actually pay the interest on this 2 trillion. So we'll just have to wait and see. But there's no way the US is going to go bankrupt. We're here every year. In fact, every 6 months, I think. But this one seems to be slightly different because obviously the rates continue to increase and the repayments on the debt are going to be, or on the increased debt, are going to be slightly prohibitive, to say the least. Economic news for today, prelim GDP, that's out at 130. Unemployment claims and GDP price index pending home sales out at 3 p.m. there, so not much on the news front. Okay, let's get on and have a look at the markets. We'll kick off with the Dow. As it said in the headlines, all markets were down yesterday, including the metals. And we'll just whiz through them and have a look. So starting off with the Dow, you can see there that we stopped at 62% of retracement. That's drawn from the next swing down where we've got the green line. These lines automatically highlight where you should draw the fib retracements. If you want to draw one to rally back, you'd use this swing here. We've got another one there and one there. So 62% retracement at the moment for the market. So we had some more selling yesterday in the 30-minute chart. Actually, just going back to this, note also that we're through the 200 MA, which has been a while since this market broke that very important moving average line. 30-minute chart, you can see that we were off to begin with. We tried to get back above the low. We had 60 minutes. An hour above the low, then we came back down and we attempted again just at the open of the Dow, but then the market was slammed to the downside and then stayed in a range waiting for the FOMC meeting minutes, and then the market down on the overnight, already testing yesterday's low, and now sitting at the close. It's not yesterday's low, that's an overnight low that market's put in there, unless I'm missing something here, but no, it's an overnight low. As can be seen there. What time is this? Yeah, it's midnight, so that's why it's rolled over to this low. So the market putting in this low, and we've got the close here that we need to get above, and then the averages BRN and DP. And at the DP we've also got the 50 EMA. In the German DAX, big down day yesterday. I haven't seen one of these for a while. Down to 89% retracement from here to here. And you can see there the market also stopping at the 50 EMA. It's important that this market actually, if it wants to move back to the upside, that it stays above the low of yesterday and also the 50 EMA. Just in case we do get a move back to the upside swing fibs would be these numbers here as we go from there to there and then project back. So let me just save that as a reference. 30-minute charts, we see the market moving lower there. Let's just have a look, see how far it actually moved yesterday. So down to the low, 280 points from high to low there. So a good move to the downside in the DAX. trading down to the S3. What did it do? It stopped there. I happened to be short down to this level and took the profits when it hit this point because again you can see the increase in volume coming into the market at this time, and then overnight so you can see prices are treading water. There's yesterday's low that you want the market to stay above. Just go back to the daily chart, and just below that you've got that 50 EMA as well. So somewhere in this region, just around about here, you've got the 50 EMA in the daily chart. Market sideways, needs to get back above the close, the 50 EMA in the 30 minutes in the DP in order to move to the upside. You could also draw in from there down to yesterday's low for the fibs on the upside should the market hold at the low and we get a bit of a reversal back to the upside. In the 5-minute chart, we sold off from the start. You can see in the futures market we move lower. We trod water until the cash market opened, and then we sold off. We had a bit of a bounce there, which you can see off the S2, and then we broke back through the S2, the BRN. We then traded sideways during the mid-morning, and then as the Dow opened, we traded down to the S3. And you can see there how the market stops at this level. We've got an 89% retracement, and then the market just again treading water late afternoon and into the evening for the FOMC meeting minutes, which were around here, which you can see there. Non-event for the market because there was no change in the interest rates. It was just last week's FOMC meeting minutes. And trades for yesterday, 166.90 and 7.39 on the profit factor. We had profitable trades, 55.45, but still a good profit, just letting those trades run when they're profitable. And for the week, 347 so far, and you can see yesterday's profits added into the mix there, 5.69 on the profit factor. And we've got 65.35 on the win-loss ratio. This is a very small bet per point on these trades this week. It's about between £1 and £5, which is why the profits are not as big. I'm just looking at finding a way of making decent profits using smaller bet amounts for traders that have limited funds, just to see if it's possible to do so. And so far, so good. And in the S&P 500, we're down to the 50 EMA. We managed to bounce off the low with this with demand, so buying was found at this level. And in fact, if we actually just draw in from here up to here, you will see that we also come down towards the 89 level there as well. So the market's holding at this level at the moment, and in fact overnight is the only market at the moment that's sitting at the DP. We had a good move back to the upside as far as this was concerned. Whether it was the release of the Nvidia profits, I don't know, but the market certainly boosted there by whatever it was overnight. Needs to stay above the DP and get above the 50 EMA to move to the upside. A break below this will see the market head down towards the S1 and the low. Meanwhile, in the UK, in FTSE land, we can see that the market moving down sharply. Took out the 78 and 89 that we drew in yesterday, was projected down, which sailed through this with the CPI numbers coming out at 8.6 and not 8.2. That was deemed a negative, and the market down towards that 50% retracement at the moment, 62, just above the 200 MA there. In the 30-minute chart, so the market's reaction to the CPI numbers yesterday of 8.6, moving down sharply there, trading down to the BRN, which was 7,600, and they're in a sideways range, which you can see at the moment. In the currencies, dollar continues to move higher. GBP, JPY also moving higher there as well, but stuck in a sideways range. 30-minute chart of this market, you can see that we sold off after hitting the high, traded all the way down to the low and stopped, and then we had a retracement in the market moving back to the upside, and then stuck in a sideways range, which you can see there. A bit of a spike down on some, obviously, Japanese news overnight. In the pound, continuing to move to the downside as well, heading towards the 89% retracement, drawn from there and projected back to these levels. An important area at the 89, 123.18 or 123 to the dollar would be important. Again, the CPI numbers weighing on this market. We moved up initially, went through the high. You can see the selling there of those first two bars, and then the selling increasing. Bit of demand at the 200 MA and the DP and the previous day's close. However, this failing to hold, trading down to the low where we see a bit more demand coming in. We get a rally back off this of about 50 points, 40, 50 points. Again, failing. Now it's got all of the averages giving it some grief. And the market back down again, sideways overnight, yesterday evening, and then down overnight, down towards the S1, already below yesterday's low. And the reason for that is quite simple. Because in the dollar index, this market continues to move up despite the fact that the US is on debt default watch. And yeah, it's just insane. I don't understand why the dollar's going up. If anybody can help me out there. I mean, if you think if a country was about to default on its, or trying to raise its debt ceiling, default on its debt, etc., that the currency would actually be tanking. Maybe it's to do with the fact that it's the world reserve currency. I don't understand why. And it's a flight to so-called quality. Well, it's the crappiest quality out of all currencies, isn't it? But yeah, I don't understand it. But there you go. There's obviously some sovereign reason behind why it's moving up, as opposed to, and I say a flight to quality as opposed to anything else. And as soon as the debt ceiling issue is sorted, it should fall out of bed. And speaking of falling out of bed, expect silver to fall out of bed today. It's trying to bounce at the moment at the 78% retracement drawn from here, projected down. And $23 an ounce is going to be very important. If that breaks, we're heading down to the 200 MA at 22.50. 22.50, wouldn't be surprised if that was hit today, to be honest with you. We saw a bit of stability yesterday morning. We came back up 89%, and then we sold off, as you can see there, through the low. Once we got through the low, we then have seen the market try and hold above 23, and even overnight it's been down to the S1 but failed to hold. Sorry, it's held, but it's going to fail to hold, as the market will take out this low and will continue down. And to be honest with you, I think the $20 level is back on the cards, especially if the debt ceiling doesn't, there is a technical default and we see the market move sideways, lower towards that $20, a couple of dollars lower. Insane, I know, absolutely insane. I mean, it should be gold and silver that are actually skyrocketing and moving strongly to the upside, but it's not. It's the US dollar, the paper, the stuff they're going to print more of and add more to the debt and higher interest payments. It's just crazy, isn't it? So we've got an 89% retracement in gold at the moment. This is holding very well, which you'd expect, but say silver's being monkey hammered at the moment. No surprise there. And also overnight, you can see it's back to yesterday's low, but also hammered down yesterday as well. Any opportunity to do this, they're going to do it. The stock market goes down, the dollar goes up, and the metals go down as well. And finally, gold-silver ratio continues to move up. We're probably going to go back up to the 90 level on this one as well. It wouldn't surprise me one bit. Okay, that's it for this one. Let's see what happens during today's session. And as ever, thanks for watching. See you in the next one.